A bit earlier in our program, we discussed the rotation that's happening in the market, and some areas like value stocks are starting to do a bit better. So the question is now the time to invest in that group? And if so, where should you put your money? Joining us is Mark Travis. He is president and portfolio manager at Intrepid Capital Funds, and he has some ideas for us. Welcome, Mark. Nice to see you again.
Glad to be here. Thank you for having me.
Your first stock pick is Hanes, and you make the point that we all need underwear, so it's a pretty reliable brand.
Well, I like to say that I like to invest in things that people need and use. Shoes, we'll talk about, underwear, electricity. I think that as far as the value choice, to me, if you look at the 9 Morningstar style box over the last 50 years, small cap value has been the best performing style on an absolute basis in that time period. And I've been in that space for the last 20. I'd say the last 5, it's been very difficult. I think what's been interesting is Michael Burry's comments, famous from the movie The Big Short, comment about small cap value last week and how there seems to be a sea change afoot where momentum shares have lost some sponsorship and money seems to be flowing into things like Hanes Brands, which has a brand that all the kids know, that we know from our youth, Champion Brands, grown very rapidly. It's gone from $1 billion in sales volume in 2017 to probably $1.8 billion this year. They're going to lose the Target business, but that's kind of built into the price.
All right.
They're growing at mid-single digits, got close to a 4% dividend, which in this world where the central bankers have their thumb on the scales of interest rates, that's a pretty high dividend rate from my perspective.
Okay.
And I think the shares are worth in the low to mid-20s from where they are today.
Quickly on these next two, if we can, Mark, we got Vistra Energy. Hasn't been public very long, just a few years, but it's had a pretty good ride so far.
Well, I think, Bill, what's interesting about this, it's spun out of the old TXU bankruptcy, and they're an independent power producer. 67% of their costs are natural gas. Up until August, it had been pretty cool in Texas, believe it or not. But it's one of the few businesses you'll see that's buying back debt, increasing their dividend, and delevering. They're generating $2 billion in free cash flow on a $10 billion market cap.
All right.
A huge free cash flow generator.
Yeah, I want to get to Skechers, which is your last pick. They have been growing quite rapidly.
I think the Greenberg family's done a great job. I'm a little leery of being in 2 share classes, but they've been good stewards of capital. They control the business through the B share class of Skechers. Worldwide growth has been pretty phenomenal. There's concerns of the tariff interactions and production in China. They've relocated that to Vietnam, and they've done a good job in getting athletes like Tony Romo and David Ortiz to kind of sponsor their product.
Interesting.
So again, a good free cash flow generator. Shares in the mid-30s. I think they're probably worth close to $50 a share.
Mark, thank you so much. Mark Travis
You're
with
welcome.
Intrepid Capital Funds.
Thank you for having me.